Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, August 16th, 2023. Before we jump into the charts, just want to encourage you, as usual, to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Also, share the content, if you would, with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor. We're always trying to find 20% or more moves on those underlying stock picks. We also offer a 5-day free trial up front. So if you sign up, you've got 5 days to check it out. If you don't like what you see, you can bow out at no cost to you whatsoever. So on with Wednesday's Tesla report. Let's start with the big picture. As usual, work our way into the day itself. We had a long-term buy signal 3 months ago above 176.78. Our initial big picture objective was this rising channel top that is now at 299.81. We tested it quite a bit over the course of a month or so, even pushed through it substantially 4 weeks ago, only to come falling off later that week to close down on the week. That key reversal high was part of a series of sell signals that, indicate now actually the channel bottom that is well below the market at 211.84. Let's actually zoom into the daily chart. And this is the more recent sell signal that occurred on the way down by closing below this 253.49 long-term rising one-third speed line. I say long-term, it's projected off the January low. It can contain buying through next week if tested over the next few days, and below which 211.84 remains a 2 to 3 week target. We are a week into that sell signal as of Tuesday's activity. So, another week or two, we can quite easily, and I think probably will, test the 211.84 channel bottom. This is a long-term channel bottom. It goes back to January, a solid 7-8 months in the making, able to contain selling through the rest of the year. And from here, we can turn back up to the 299.81 long-term channel top. It's hard to put both of those formations on the same page, but the channel bottom is based on this high and this extreme high. And so it has a steeper angle than this mere trend line off the lows. It is the 211.84. So once we test 211.84, we can rotate back to the 299.81 channel top within several months of doing so, within 1 to 2 months or so of doing so. And that is the big picture. Just a reminder that we are heavy through next week below 253.49, anticipating 211.84 as a completed 2 to 3 week downside objective. So if you bought the 210 or 215 out of the money puts a week ago, that is still that's still what you should be doing. I don't know how else to say it. Hold on to those puts because they're going to probably make more money as we continue into next week and as this continues to ease back to 211.84 over the next week or two. So let's zoom in a little bit and take a closer look at some of these levels. We did close below that gap area at 235.23. That was a gap that we closed actually a couple of days ago, and we then closed below it actually on Tuesday. There's also a trend line coming down off these lows that performed pretty well about a week ago, and it's at 235.45. The top of this gap, or the bottom of the gap, really 235.23. So I've rounded up to the trend line at 235.45. And I'll just lower this a little bit so you can see all these levels. Holding below 235.45, we could test 223.85 today. We do have minor support levels on the way down, carefully chosen ones, I might add. 32.61, 30.15, 26.22, all well suited for aggressive day traders. And when I use the phrase aggressive day traders, I'm talking about day traders who trade they're beyond the one trade of the day. They may be trading in and out of the market several times a day, scalping a point here, several points there. But if you're looking for the trade of the day, if you're a day trader, it really is being or setting a short at 235.45 and buying it back at 223.85. This is a 3/8 downside Fibonacci off the January low against the more recent high in July. We can actually bottom out there for a day. We might even bounce off of this classic Fibonacci level into later week, back into the mid 230s, perhaps within a day or two. But if we were to close today below 223.85, we should by Friday's close actually test 211.84. This longer term channel bottom, once again able to contain selling through September and really through the rest of the year. And from here, we can consolidate and rotate higher back into the 290s and higher as we move into later year. And so that is that. I think that covers the downside pretty well. 235.45. Now for the upside, where are you? I'm looking for, well, I guess I have to zoom in just a little bit. Here we are. 240.50. So if we push through 235.45, 240.50, nothing more than Tuesday's high. That is the high of the low so far, following the high from July. So it has pivot point qualities, can contain intraday strength. And if we push through 240.50, 244.59 is likely today, and that can contain session strength. So, if we happen to push or open above 235.45, which I can find again right here, we just might, as the day wears on, rally up to this 244.59 level, which can contain daily buying pressures. And if we settle today above 244.59, and that would be a pretty decent rally today that I'm not anticipating, but if so, then we should tomorrow test 253.91, this 2 to 3 week channel top now coming down, and it lines up nicely. In fact, I'm going to find the right chart here. It lines up nicely right now with this former speed line. So if over the next few days we push into the lower 250s, this 253.49 to 53.91 region presents a meaningful opportunity to set a short, or if you happen to be long at that time, to liquidate a long. If your time horizon is 1 to 3 weeks out, it is setting a short at 253.49 to 253.91 in anticipation of bearish rotation back to 211.84 over the following 2 to 3 weeks. Now, if we close above 253.91, I think we've got a good August low. I may reduce the significance of 270.213. In fact, I think I will just pretend that I reduce this to a session containment level only, because at this point in time, with this convergence, and it's not going to happen today, so I don't know why I'm wasting all of my breath on this, but if we were to close above 253.91, I would signal a good low through the rest of August and into September trade, and over the following 3 to 5 weeks, 299.81 likely that long-term resistance area, and on the way up, certainly respecting 272.13 as a level that can contain daily buying pressures, possibly on a 2 to 3 day basis. But really, closing above, once again, 253.91, we are off the 211.84 expectation, and then within 2 to 3 weeks or so, expecting 299.81, where once again, we can top out on a monthly basis and fall off again from there. And it would be a settlement above 299.81 at the end of any week by a 1% margin that would signal 3 to 5 months aggressive bullish continuation back to the 414.49 November 21 high. I think I pretty much rounded it out. I will leave you with this image here. This is our resistance for the day, 35.45, below which 23.85 is attainable. I can't say it's expected because that would be quite a sell-off today, but, we are in the midst of several sell signals, and, I wouldn't be surprised if we tested 223.85 by the closing bell. That is all I have for Wednesday's Tesla Report. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Thursday's Tesla Report. You have a great day.